I'm going to show you the IT market structure shift that I've came up with. I will also step by step teach you how I use it in my trading, plus show you my exact trading strategy that I've been using that no one else is teaching. Make sure you watch to the end of the video so you don't miss out on the strategy that I truly think can change your trading because it has changed mine. So if that sounds good to you and you are down, then let's go ahead for me to be able to teach you the IT market short shift, you need to know what intermediate term highs and lows are. Intermediate term high is a high that's filled a fair value gap, as you can see in the bottom picture there. In the top picture, you can see that a bullish fair value gap form and then price action dip down into it, forming a low that is an ITL. So you have the ITL and ITH. Now that you know that, let's go into what is the ISS stand for. It's intermediate term market structure shift. The E market structure shift is a higher low that filled a fair value gap, aka also known as intermediate term lows and intermediate term highs, that is then broken. That is the intermediate term market structure shift. All right, so here I have created a little drawing. As price goes up, you're going to want to see a retracement and then look for a fair value gap to form. And once it comes up into the fair value gap, consolidates for a second, maybe forms a swing high, and then retraces. That creates the intermediate term high. And then what you're looking for is for price to then break that intermediate term high, which that is a real market structure shift that's going to provide an opportunity because it is a reversal. You do not see this happen, especially on the 3-minute, unless price is actually reversed and it's going to go the other direction, giving you opportunity. I have found that this time frame offers the best success rate. There we have an intermediate term high. We are not going to look to go bullish until this is broken, keeping you away from getting rejected. Let's say you took this one, price came down, stopped out. Now that this is broken right here, this ITH gets broken. Let's move this out of the way. Right here, it gets broken. When that happens, you know you're safe to go long because once these get broken, especially on the 3-minute, price is not going to go below them again unless it's going to continue down even farther. It's not 100%, but it's very high. It is very good, and it provides amazing opportunity. Once you see this broken, you're safe to take either the next fair value gap that forms, like ICT teaches his 2022 mentorship model. There's a fair value gap, a bullish one that formed there. You'd be safe to take this fair value gap trade, and then you can put your stop below the intermediate term low there. And then in futures, this is a lot of money in futures. I would definitely be selling into strength here. And then let's find a bearish example. All right, so I found an example. This is ES on the 3-minute. Let's say when the news popped off here at 8:30 on Wednesday, the CPI report, and you wanted to go short, but you don't know when you would want to go short. Price comes down, creates a little low, and then it comes down again into the fair value gap, pops up. This right here would then be what? An intermediate term low because it filled the fair value gap. That's all you're looking for. It's really simple. There's not a whole lot that goes into it. Price comes up, fills the fair value gap, and then pops up, creating an intermediate term low, and then breaks it. So there is your intermediate term low broken because if price was going to continue up in that direction, ITLs and ITHs would hold. That comes from ICT's mouth himself in episode 12 of the 2022 mentorship model, or the 2022 mentorship video, which, by the way, is his best video he's ever made. It's a little confusing at first, but if you want to learn more about advanced market structures, you can watch that video, or I also have a couple of videos about it. So now that we know that is an ITL and it's broken, you are safe to take the next opportunity that is given, which it can be a fair value gap, mitigation block, breaker block, whatever you like. So there you go, boom. And then it works. What is really good about this is if you were just take every fair value gap trade which I'm sure a lot of you did because I used to do it. I would just take any fair value gaps that popped up. It's going to keep you safe because they're unlikely to break. So this intermediate term high here that formed, you can put your stop above here. ITL broken. So now you're going to look for ITHs to act as support. So now that we know that, boom, right there. And then price comes down, comes back up, fills another fair value gap right there. Boom, beautiful. And then it comes down, it's filling another fair value gap here. So let's say you wanted to go bullish here because it's a little fair value gap there. And we're starting to get where it's creating like a breaker. It's getting close to there. So let's say you thought this was the end of it because it filled the entire fair value gap and you wanted to go long, you go long and then you get stopped out because you're not looking at advanced market structure. And then price comes up, fills that, breaks another intermediate term low. Intermediate term lows are being broken. Intermediate term highs are being respected. That is narrative. That's going to tell you what you need to know. So now how would you know where to go long? Find an intermediate term high. So price comes down, that gets broken. So this isn't one, right? And then right here, we have the first intermediate term high form that's filling a fair value gap. So obviously it fills it up to there, but as long as you see price come up into here a quarter of the way, you're good to call that an intermediate term high. So that red intermediate term high formed. So now we want to go long, we have to wait until this gets broken. That's rule one. And then bam, it gets broken. So then you'll take the first opportunity given to you. It can be a fair value gap, which one forms right there. So right here, you have a fair value gap, get touched into right there. Boom. You would enter there, and then you can stay long until an intermediate term low is broken. If we're long, we do not want to see price break that. Then price comes up, dips down, fills another fair value gap, right? And then now, if we're long and this gets broken, we're going to want to get out of our short. Or we're going to want to get out of our long if that gets broken. So right here, it is broken. ITL broken. So now you're bearish until proven otherwise. ITL broken. All right. So price comes up. It's filling this fair value gap, creating equal highs for some other later date. It's inducing traders. So now you're going to you'd want to get short. After I see this, I'm going to get short at the first opportunity. So where's the first opportunity? Let's look at this fair value gap here. So that red. So boom. So as price comes up into here, I'm going to enter short. Stop goes above the high, which is saved. Why is it saved? Because an ITL was broken. It told you ahead of time that price is going down. It's like I talk about in my past videos about fair value gaps being respected and disrespected. Kind of the same thing, a little different though. So then price fails there. We're short, our stop's above here. And then boom, the price comes down, fills a fair value gap, a little baby one there. So then now we're short from up here. Now you can move your stop down here. I prefer to sell into strength and then put my stop and then re-add these spots and then put my stop up there like a new trade almost. And then the price comes down, comes up, fills in for another fair value gap. Boom. So you have another ITH form there. And then it's the end of the day. So I hope this really helps you guys in understanding the intermediate term market structure shift. Now I'm going to show you my strategy that I've been using to make 2 to 3 grand per day. It's similar to this, but I add in a couple different things and use the intermediate term order blocks as well. So here we are on NQ on a 3-minute chart. I'm going to break down my strategy, combining the IT market structure shift with the ITOB. And I'm going to break that down to you guys. This strategy I've been absolutely killing it with. So let's get into it. This is Monday the 10th, right after the New York opening coming into 10 o'clock. So what we're looking for now is price to break and close above this intermediate term high, which is right here. So for me to go long, I need to see a close above that, and then I can drop down and show you guys how I do the strategy. So let's go forward a little bit. So if we get a close above it, and then that's the first close above it. So now I'm going to drop down to a 1-minute chart and look for price to return back to the red line or somewhere in here and fill the fair value gap. Because what you'll see on the 1-minute chart is price doesn't really care about the fair value gaps. What it cares about is the breaker blocks and mitigation blocks coming back to either here or here. So let's put a line there. Boom. And then we'll just move this one up a little bit and see what happens. So go forward. So price dipped down into there. Let's do one more forward. There we go. So now I want to see how price reacts here. And if it goes down and puts in a bullish reaction, I'm going to go long. So there we go. I would go long there, then switch back to the 3-minute chart. And then price did not fill this fair value gap here. So then now we're in profit. Go forward. So there you go. Now you have an intermediate term low being formed. Let's see if it drops back down into, there's a fair value gap right here. So this makes that an ITOB, which I talk about in other videos, but it is a low that dips down into a fair value gap. The last down close candle here is the intermediate term order block. So it's an order block that fills a fair value gap. Let's go forward, and then price takes off that way. So then now we're in major profits. You look for the break, then you drop down and enter on a 1 or 2-minute chart. Let's go forward until we see another opportunity, and then price is coming down, creates an intermediate term low there, fills the fair value gap. So the last down close candle here would be this one. So we'll use that as the ITOB. Make that orange, and then price just rips. And then now we're getting a retracement. It violates the ITOB and breaks the intermediate term low there. So now you have a bearish market structure shift, intermediate term market structure shift. We're going to go down the 1 minute and see if we get a chance to go short, which it just doesn't offer that. So now we're coming back to the original ITOB on the 3-minute, which is right here. So let's highlight that and see how price reacts to it. If you get a bullish reaction inside of here and it respects it, then it's an opportunity to go long. And so far it's respecting it, no closes below it. And so you can go long here knowing that this is one of the original points that it touched from. It went all the way up. Now it's retracing back to here. So you can go long there. And then right there you have another shift in market structure. And then you could have waited, instead of taking this one, which is more risky and less chances of working out, you could have just waited for this to take place and then drop down to a 1-minute chart. And then now we're going to see if we get a retracement down to here. Let's go forward. And there you go. So now you could add here because we're using the 1-minute mitigation block. And then boom. Now we have liftoff again. Perfect. Beautiful. So now I hope you guys can see that this is my strategy. I'm using the intermediate term market structure shifts with ITOBs to get long. And then I'm dropping down to 1 minute looking for mitigation blocks because the fair value gaps don't work on the 1 minute very well. And then you just rinse and repeat this scalping strategy. I hope this video really helps you guys. Let me know in the comments what you think. And if you're interested in funding, I will put the link to my website in there. It's verifiedfundingcompanies.com, where I post the latest discounts and all that.